Milton Friedman said that you could have a type of Federal Reserve or a computer increase the money at 3%. But if you understand human nature, 3.5 might be better than 3%. And the Congress loves this because they can spend money. They don't have to tax directly, and they can always resort to the Fed. So whether it's the Fed deliberately doing this or the pressure from the political side and the Congress, no, I don't think so. It's the monetary system. You have to have the consumer in charge, and only a gold coin standard can do that, because if you mistrust the system, you can always say, hey, are they printing too much money? Let me see if they have the gold in the bank, and that's the only real test of money.
We didn't have a gold standard in the 1980s, and we had great money.
Yeah, gold is definitely my favorite four-letter word. I mean, it is. Look, we basically had the equivalent of $300 gold for almost 20 years. I mean, it worked beautifully. It all broke down at the beginning of the new century. I mean, that's the interesting thing. It just completely broke down. Joe Battipaglia, you've heard Congressman Paul, you've heard Jerry Bowyer and others. Joe, if you buy into it, I don't know if you do or not, what do you do as an investor if you're faced with this problem, the breakdown in Federal Reserve and monetary discipline? Inflation is the cruelest tax of all. As an investor, Joe, what do you do about it?
Well, unfortunately, you become a trader, not an investor, because policy decisions will be made that will work in contrast to the economy's proper functioning, and you will have bouts of inflation and you will have bubbles. So the long-term strategy of buying and holding and growing equity gets tossed over to trading environment, and you swing from commodity classes to traditional assets like equities and bonds. And that's a very dangerous place to be, because you create more risk in the marketplace, you retard investment, I think, and you also retard the ability to accumulate wealth over time, because what's happening is monetarism is being put at the beck and call of Keynesianism. So now you've got government policy run amok and the central banker coming in behind to make sure there's no failure, puff up the economy, create more credit, keep the bubbles going. It's a very bad mixture.
Well, it's over-tinkering and fine-tuning.
Correct.
You're exactly right. Dave Kudlow, what's your take on all this?
Well, I have to weigh in on defense of the Fed. The Fed cannot do its job until and unless it restores financial markets with functionality. We have dysfunctional financial markets. That means
what does that mean? What does that mean?
Markets
in plain language. What did you just say?
Some markets are not clearing at all, like adjustable rate preferreds or student loans. Other markets are not clearing at pricing, which is normal. That was true of the federal agencies. So you have to have a fix, and that's part of this process. And if you look at history far back enough, you will find in the gold rush days 150 years ago, there was rampant inflation in California during gold discoveries. Gold is not the magic cure.
Jerry Bowyer, did Dave Kudlow just blame markets? Did I hear that right, Jerry?
Well, I think what he did is he saw that there's a problem in the markets and basically thought that the Fed could solve that with the printing press. There are problems in credit markets, but they're regulatory problems. A lot of these loans were foisted on the banks by political pressure, Community Reinvestment Act and other things. And so the banks did what the regulators told them to do, and now they're having trouble selling those mortgages because a lot of them shouldn't have been issued in the first place. You can't solve that with the printing press. If you could solve it with the printing press, it would already be solved, because the Fed funds rate is at 2%, and we are pouring money into this economy. The solution is not more money.
Well, in Argentina would be the center of the world economy.
Right.
Jim LeCamp, do you want to weigh in on this? You've heard Mr. Paul.
Yeah.
You've heard the Kotak opposition to it. You heard Jerry Bowyer and Joe B. I want to know, should we be advising investors to run a sort of inflationist investment policy? In other words, today, commodities, basic materials, and energies got hit, but maybe you buy those on the dip because that's the new long-run play. And as Joe Battipaglia said, inflation is inherently unstable, so you can't buy and hold. You got to trade the market. What's your take, Mr. LeCamp?
Yeah, it's a fiat monetary currency system, and when you have something like that, it builds up a bigger and bigger mountain of debt and creates asset bubbles, just like Joe said. And so the buy and hold really hadn't worked over the last 10 years. The 10-year numbers on the S&P 500 right now are about 2.7% per year. That's subpar throughout history. And the reason is because we keep creating these bubbles. And Fannie Mae and Freddie Mac are poster childs for why we should not have government involvement in our our financial system to a big degree. And the reason is that these are semi-socialistic, not even semi-socialistic, they're socialistic entities that were allowed to create bad business models because of this implied government backing. Well, now we have to give this unlimited line of credit with taxpayer money to a bad business. It's not good policy. It rewards bad behavior, and I think we need to get government as much out as we can.
Mr. Paul, just two quickies on the way out, sir. We appreciate your time. You going to vote for bailing out Fannie and Freddie?
No, no way. I can't do that because that would contradict everything I've been saying. No, we should have the cleansing of the system. All the malinvestment, all the problems came from the artificially low interest rates. Yes, the markets are dysfunctional, but the problem should be laid at the doorstep of the Federal Reserve. Like I said, not just Bernanke, but the system itself, all the Greenspan years. It caused all of malinvestment. There were a lot of sound economists over the last 10 years warning about this housing bubble. I even had a bill in 8 years ago to remove the line of credit to the Fed, saying it was a moral hazard because even though it was only $2.5 billion, I said when push comes to shove, it's going to be a lot more.
Yeah,
now it looks like it's $300 billion.
Yeah, we're going to go from 2.25 to 300. Last one real quick, sir. Political question. I'm going to switch gears. Have you thrown your support to Bob Barr, the Libertarian candidate?
No, I have not. I have not endorsed any one particular candidate. The only question I've answered has been, would I vote for John McCain, and I wouldn't be able to.
But you haven't ruled out voting for Barr, is that correct?
No, I have not. I'll probably do some type of announcement like that sometime in September.
All right. We appreciate your time very much,
Thank
sir.
you.
Congressman Ron Paul, thank you for joining us. Dave Kotak, thank you for joining us. Everybody else is going to come back.